The bond market has been under pressure in recent months, as the Federal Reserve has signaled its intention to taper its asset purchases and raise interest rates in response to the inflationary pressures and the economic recovery. As a result, bond prices have fallen, pushing yields higher. This has created an opportunity for investors who are looking for income and diversification in their portfolios. In this video, we will explore 3 exchange-traded funds, ETFs, that offer exposure to the corporate bond market, which has been outperforming the government bond market. 3 bond ETFs to consider as interest rates rise. As the Fed signals more rate hikes are likely ahead, the bond market provides attractive yields. Thus, the aggregate U.S. bond index currently yields 5.14%, which is only slightly lower than the peak reached in 2022. We have selected 3 exchange-traded funds focused on corporate bonds with different maturities and risk profiles. SPDR Portfolio High Yield Bond ETF, 13.3% upside potential, 7.1% dividend yield. The SPDR Portfolio High Yield Bond ETF, SPHY, is a State Street managed exchange-traded fund that invests in the U.S. dollar-denominated corporate bonds rated below investment grade, BA3. The ETF invests in bonds with at least 18 months remaining until maturity. It tracks the ICE BofA US High Yield Index using a representative sampling method. SPDR currently owns 1,904 bonds with an average maturity of 5.02 years. Since the beginning of the year, the ETF has generated a yield of 6.98%, while its annual dividend yield is 7.1%. The fund offers exposure to the high-yield segment of the corporate bond market, which has higher returns but also higher risks. The fund's top holdings include bonds issued by Sprint, Dish Network, and Hertz. The fund has a low expense ratio of 0.15% and a moderate duration of 3.8 years, which means it is less sensitive to interest rate changes. The fund has an upside potential of 13.3%, according to analysts. Schwab 5 to 10-year corporate bond ETF, 12.8% upside potential, 3.79% dividend yield. The Schwab 5 to 10-year corporate bond ETF, SCHI, is an exchange-traded fund managed by Charles Schwab Investment Management that invests in the U.S. dollar-denominated corporate bonds with an investment credit rating, BBB/A, and maturities of 5 to 10 years. The ETF tracks the Bloomberg US 5 to 10-year corporate bond index based on a representative sampling method. The ETF is currently home to 2,084 bonds with an average maturity of 7.5 years. The fund's year-to-date yield is 4.06%, while its annual dividend yield is 3.79%. The fund offers exposure to the intermediate-term segment of the corporate bond market, which has moderate returns and risks. The fund's top holdings include bonds issued by Verizon, AT&T, and Comcast. The fund has a low expense ratio of 0.06% and a moderate duration of 6.6 years, which means it is moderately sensitive to interest rate changes. The fund has an upside potential of 12.8%, according to analysts. Vanguard Long-Term Corporate Bond ETF, 29.2% upside potential, 4.78% dividend yield. The Vanguard Long-Term Corporate Bond ETF, VCLT, is an exchange-traded fund managed by Vanguard Group that invests primarily in the U.S. dollar-denominated investment grade, BBB/A, bonds with maturities of over 10 years. The ETF is focused on the industrial, utility, and financial sectors, and tracks the Bloomberg US 10-plus-year corporate bond index using a representative sampling method. The fund currently holds 2,787 bonds with an average maturity of 22.9 years. Since the beginning of the year, it has provided a return of 5.3%, while its annual dividend yield is 4.78%. The fund offers exposure to the long-term segment of the corporate bond market, which has higher returns but also higher risks. The fund's top holdings include bonds issued by Apple, Microsoft, and Amazon. The fund has a low expense ratio of 0.05% and a high duration of 14.6 years, which means it is highly sensitive to interest rate changes. The fund has an upside potential of 29.2%, according to analysts.